Welcome to FXTech's weekly analysis. This is our AUD/USD report for the week of November 24th to 29th, 2025. In this video, we'll dissect the critical market-moving events, including Australia's hot CPI print and the unprecedented uncertainty surrounding the US Federal Reserve. We'll break down the technical picture, providing clear short-term and mid-term outlooks with key levels to watch. We'll also discuss the dominant role of global risk sentiment and how to navigate this complex environment with disciplined trading strategies. Stay tuned for a comprehensive breakdown of one of the most fascinating currency pairs on the board. Let's get started. This week, the Australian dollar was caught in a tug-of-war between stellar domestic data and deteriorating global risk sentiment. Despite a hawkish repricing of the RBA, the AUD/USD pair struggled, closing the week down 1.13% and becoming the second worst performer in the G10. This disconnect highlights a critical theme. Global risk flows are currently overwhelming strong local fundamentals. The high correlation between AUD/USD and the S&P 500, which stands between 0.7 and 0.9, meant that as equities tumbled on AI bubble fears, the Aussie was dragged down with them, unable to capitalize on its own positive news. This week's game changer was the market's dramatic repricing of the Reserve Bank of Australia. Following a hot CPI print and a stunning plus 6.4% surge in Q3 capital expenditure, expectations for RBA rate cuts have all but evaporated. The market is now pricing in a maximum of just 11 basis points of easing by May 2026. In fact, the conversation has shifted entirely, with major analysts like NAB now flagging the risk of a potential rate hike by the first half of 2026. The only path to cuts now seems to be a sharp labor market downturn or a major external shock. The RBA's hawkish stance is now firmly established. Meanwhile, the US Federal Reserve is facing unprecedented uncertainty ahead of its December 9th to 10th meeting. Due to the earlier government shutdown, policymakers are flying blind, lacking the critical November CPI and employment data needed to make an informed decision. This data void has caused extreme volatility in rate cut expectations, with odds for a December cut swinging wildly from 35% to over 70% and back again, based on conflicting headlines. Hawkish FOMC minutes were contradicted by dovish comments from NY Fed President John Williams, creating what many are calling one of the most unpredictable Fed meetings in recent memory. Global risk sentiment was the dominant driver this week, putting a firm cap on any potential AUD gains. Renewed fears of an AI-driven bubble in the equity markets triggered the largest intraday reversal in the S&P 500 since April. Major indices like the DOW and NASDAQ flashed bearish signals, and the risk-off tone was amplified by weakness in European markets. This external pressure completely overwhelmed the positive domestic story for the Aussie. As long as this risk-averse mood persists, the AUD will struggle to rally, regardless of how strong its own fundamentals are. The high correlation to equities makes it a proxy for global risk. From a technical perspective, AUD/USD is consolidating at a critical support zone. The pair is currently trading in a tight range between 0.6440 and 0.6520. The 0.6440 level is a formidable floor, representing the October lows and the 200-day moving average, where buyers have repeatedly stepped in. On the upside, 0.6520 is the key resistance that must be broken to confirm any bullish momentum. While bearish momentum is fading and a potential bottoming process is forming, a decisive breakout is needed for clear direction. A break below 0.6440 opens the door to 0.6350, while a move above 0.6520 targets the major pivot at 0.6550. For the next 1 to 2 weeks, our outlook is neutral with a slight bullish tilt, defined by the range of 0.6440 to 0.6550. The market is caught between the hawkish RBA pivot, providing fundamental support, and the uncertain global risk sentiment acting as a headwind. Liquidity will likely be thin following the U.S. Thanksgiving holiday, which could lead to choppy price action. For a bullish breakout, we need to see a sustained move above 0.6520, which would target 0.6550. Conversely, a bearish breakdown below the 0.6440 support level would open the path towards 0.6350. Patience is key while the pair is range-bound. Over the next 1 to 3 months, we hold a cautiously bullish view, conditional on risk sentiment stabilizing. We see a 55% probability of the AUD USD targeting the 0.6650 to 0.6700 range. This is based on the growing monetary policy divergence, with the RBA's easing cycle now considered over, while the FED is still expected to cut rates eventually. However, this outlook is highly dependent on global risk appetite. If a significant equity market downturn occurs, there is a 45% risk of the pair falling towards 0.6350. The key pivot level to watch is 0.6550. A firm break above this level is needed to validate the bullish case. Navigating this market requires a disciplined approach. Key upside risks include a surprise RBA hike, a dovish Fed pivot, or a strong risk-on rally. Downside risks are a global recession, an equity market crash, or a hawkish Fed surprise. Range traders can sell near 0.6520 and buy near 0.6440. Breakout traders should wait for a decisive move above 0.6550 or below 0.6440. Position traders can look to build long positions on dips if risk sentiment improves. Crucially, use tight stop losses, monitor the S&P 500 correlation, and pay close attention to the upcoming Fed meeting. Patience is required until a clear technical setup emerges. In conclusion, the AUD/USD is at a fascinating crossroads. Strong domestic fundamentals, led by a hawkish RBA, are providing a solid floor under the currency. However, it remains shackled by global risk sentiment and its high correlation to volatile equity markets. The key battle is between local strength and global fear. For the week ahead, expect continued consolidation within the 0.6440 to 0.6550 range. A major catalyst, likely from the Fed's December meeting or a significant shift in risk appetite, will be needed to break the deadlock. Thank you for watching. Subscribe to FXTech for more in-depth market analysis.